Good morning, everybody. So today is a great day because we're gonna have a very interesting conversation. So we're gonna talk about financing, bringing money. Why? Simply because we need money if we're gonna talk about the energy transition happening in Africa. Because you know that there is a lot of request that is actually there to obviously take project to the next stage. But one of the key missing challenge people sometimes talking about it's financing. And financing, the traditional sources are clearly not sufficient. And we know that only 2% of finance globally actually go to the continent of Africa. So what can we do? How can we go further? This is a conversation I'd like to explore further with you today. But it's just not going to be just me. So I have with me an expert, right, from Norfund that you probably will know, which is the Norway DFI, so Development Finance Institution. So we're going to explore this conversation. What more can be done to get this topic to move to the next stage? So what could be the other sources of funding or financing mechanism that we could say we want to explore that? And Bjornar, who's going to be my guest here, so has more than 15-year experience in the firm, but obviously a much wider experience overall. So he's going to be talking to us about this topic. I can't wait to discover more. So without further ado, so ladies and gentlemen, let me just welcome into the platform. So Bjornar, can you see me?
I
Can
can,
you
Tom.
hear me well?
I can hear you well. Thank you very much. And you can hear me.
Okay, you can hear me. Okay, excellent. Excellent, excellent. I think I can't. I think it's a little bit shaky, but I believe if you can hear me, that's fine. Yeah,
I can hear you
you're
fine.
good. Can you hear me,
Yes, I
Bjornar?
can. Can you hear
Okay,
me?
so if you can hear me,
Yes, I can.
so I should be okay. So if that's fine, so if you can hear me, that okay. If you can hear me, that's fine. So I think before we kick up the conversation, I think it just makes sense for you if you can give us a little bit of an introduction, who you are, what you do, and what is not fun for people that still don't understand what it is, and then we could kick off with that.
Sure, I can do that. And first of all, thank you very much for inviting me to the conversation today. It's great to be here and talk about things that I really kind of work with on a daily basis and which is important to me. Personally, I've been in Norfund now for about 16 years or so, working in this field within energy, a lot in Africa, but also more and more in Asia recent years. And it's been a really interesting journey to be part of both what's been happening in Africa in the energy sector, but also within Norfund. Norfund is, as you mentioned, a development finance institution. We're 100% owned by the Norwegian government, and we have a mandate to invest together with private sector in terms of creating economic development. But also more recently, we have also received a climate mandate. So we are also investing to reduce global climate emissions. So we kind of have a dual mandate. We do that via various verticals within financial inclusion. That's banks and microfinance. We do other direct investments within agri and manufacturing as well, and some fund investments. But personally, I've been working exclusively within the energy team in Norfund the last 16 years, which has been an incredible journey from coming in there as the second person, and now I think we'll be about 40 people probably by the end of the year. So it's been a fantastic journey in that sense. And I think over those years, we've seen a lot of things happening in the energy sector in Africa as well. I think Norfund's tried to play a role there, and I think we are still very keen to keep playing a role in the African energy transition that I would say is ongoing. Can you hear me okay, Tony?
I can hear you. I see a little bit shaky. Can you hear me
Oh,
well, Bjornar?
yeah, I hear you well.
I think now it looks like it has stabilized. For some reason, for the last, I could hear what you were saying, but
Okay.
you're struggling. So hopefully, people were not struggling too much. But I heard what you were saying.
Okay, that's
That's
good.
actually
That's
okay.
good.
I think
Yeah.
I think let's carry on because obviously I don't want to get you to repeat there, but I'm sure we can pick up more information as you're talking about. So we have a very interesting conversation today, right? And I think for me, you're just a perfect person to do it. And but I wanted to know, so what actually first of all drew you into renewable energy field. But before you do that, let me just first of all welcome people who are actually watching us live. So I definitely appreciate that. I can see there are many of them. So just gonna say, if you have any question that you want to ask us, please feel free to drop that in the comments sections, and I will make sure that I will transfer that to Bjornar. Or if you want, if it's preferable, you can send it in my actually personal inbox, and then I also will be sharing that. But if I come back to you, Bjornar, so I just wanted to understand. So very firstly, so what actually drew you into the sector? Was it a calling? You woke up one day and you say, "Hey, this is what I want to be doing," or you've always wanted to come here? Whoa, what would you say?
Look, yeah, no, thanks. That's a great question. I kind of got drawn into this by an interest sparked in more from the development side. I had an interest in doing some travels early on while I was still in business school in emerging markets, and found that kind of interesting. Wanted to work something that related to those markets. Working international was always been something that I found kind of attracting and interesting. And then I did a few years working in kind of in transaction advisory in KPMG, and then this opportunity in Norfund came along, which was within renewable energy at that time, which was something I also had worked a bit on from the consulting side and found interesting. So I was kind of dragged into this sector from more the development angle, more the international angle, ability to work using, let's say, private sector tools, investing tools, with a bit of a different mandate than just earning money from our owner and so on. But the development angle was what fascinated me, and using those private sector tools. And then after doing more and more renewables, and after I think also climate has become such a pressing issue also for these markets, I think that's kind of my motivation has more and more gone towards that part of it. And I'm very happy to see that we also have now a dedicated mandate for doing climate investments on the Norfund as well. So we have about $1 billion we're mandated under that mandate. So I think that was been triggering me over the last 5 to 10 years. It's more from the climate side of it, but I think it goes hand in hand with development and economic growth and all you need. So it kind of ticks a lot of boxes, and it's great to work with international partners. It's a great international organization in Norfund as well. I think we have about 25 different nationalities just in my teams here of over 35 people. I think we're 19 nationalities. So my colleagues are international, and that's great. We have regional offices, but not at least our partners and our investees we operate is international, and I really enjoy that part of it. And it's also been energy has changed a lot since I started over the 16 years here. When we started out, we had mostly hydropower, very long kind of development cycles on projects. And then we kind of back in 2011, 12, we started doing our first solar projects. And as that has become more and more competitive, and we're seeing all sorts of kind of acceleration of that. Storage is coming. Renewables are now competitive with other sources, if not even cheaper than many of the fossil alternatives, which was not the case when we started out in this. So I think it's been an incredible, interesting journey that has kept it interesting for these 16 years, and still is really keeping it interesting.
Excellent. And diving straight into the question, I can see already some question that I've received. We're definitely going to find a way to go into that. So, what would you say are the innovative financial instruments that are actually showing the most promise, in the sector?
Look, to be honest with you, I don't think it's so much about the financial instruments or being kind of very creative there. I think first and foremost, you need to get the policy right, because you can't really financial engineer yourself out if there's no policy in place, because these are large scale infrastructure projects. It's high investment cost up front, long-term steady cash flows, and to get investors interested in that, you need kind of a stable policy framework. And you see those countries who are putting together policies which are predictable and have the right risk allocation, they will attract investments. And when they do that, I think the financial community will find the best tailored instruments to fit the various markets. So you see that, for instance, in South Africa, which will have had some starts and stops, so to speak, but they have had this procurement program running that has enabled the financial sector to keep up innovating and making more and more better products for the products, because they have a steady stream of projects coming. So I think you can't really financially engineer yourself out if you don't have a good policy environment to work in. And that's been a challenge in some of the markets in Africa, I think, to get that right from the government side. But I think there's a lot being done on it, and continue to do so. But that's my first kind of answer to that. And if you get that right, then you can start mobilizing the domestic financial sector, because I think that's a crucial missing piece that we're still struggling with in Africa, which South Africa has succeeded with, and that's why they are building quite a bit, is to mobilize those domestic sources of capital. Because even though bringing in foreign capital like ourselves and others are important, because the scale of what's needing to be built in South Africa, in Africa in general, is so large, so there needs a lot of capital sources. But there's a lot of domestic capital sources that just put into government bonds and don't really get into that market. And I think that's a crucial one to unlock, which they have done in South Africa, where there is pension funds money going into these projects, long-term stable cash flows. I think that's a challenge for regulators and policymakers in other parts to try and unlock that. And if you can put that to place, I think investors will come when the policies are right. And then the financial innovative part of it is more about, at the margin, I think, making projects more affordable, because if you can get more better financial products, if you have a policy environment that, for instance, encourage tenders such that people can come in and compete on the lowest tariffs, they will seek out the best financial instruments to enable them to bid the lowest tariffs, as we also seen in South Africa and all the markets we operate, such as India, for instance. So I think that's the crucial piece, and the financial engineering will come.
Okay, I think so. Basically, if I hear you correctly, so it's not such about the financial instrument. You first of all need to get the policy right, the regulatory framework. So, and obviously, you clearly encourage a lot of countries to follow the example of South Africa, because obviously with the RIP program, so it produced, I think, what, 6 gigawatts of of I don't know, more than that. I think it's 14 gigawatts
Yep.
of renewables energy. That's something that is clearly admired across the world. So that's fine. I think I hear you there. So definitely we could definitely see that. So what could be then the those kind of policy you believe one should be looking at to see in order to for those investment to come forward? So because I'm sure there will be a lot of people from regulatory framework in various countries in Africa listening to you, hear you, are willing to do the right things, but they would like to have as well some more guidance immediately. So if they are free that you would like to advise, what would they be?
Well, I think that's a good question. I think I would then encourage to focus on at least two separate streams, and one is to put together a framework for government procurement of large scale bulk power, so to speak. Along the lines of the V project program in South Africa, same as they're also doing for both from a federal and a state level in India, where you have putting together a bankable set of project documents that can be tendered out, and you will then probably see more private sector participation. And it's important here with predictability, because if you're going to get developers and capital to allocate time and resources towards a market, they would like to see that there is repeat business, not just one-off start-stop. And that was something that South Africa struggled a bit with, even though the REAP was successful. It was a big problem that it grounded to a halt for a number of years, but it's back up and running now. So predictability is very important for investors. And if they're going to take the time and effort to invest into a country, the resources you take, they want to know that there is more coming. So announcing programs over a longer period of time, saying we're going to do this over X amount of years with X amount of allocation. So there's some predictability into it. And then it's a lot of good advice to get there, to get kind of the contracting structure right. There's always obviously concern about the credit risk of off-takers and so on, but there are structures there to address that. And I think Places in East Africa have seen that it's possible. Uganda have done it over a number of years. They didn't do it auction-wise, but they have a long track record of attracting IPPs to Uganda, for instance. So it's possible to do in these markets. So I think that's one track that's also proven that's possible. And the other track is also to look at what you can do to encourage private to private. So that's what they've done also in South Africa now with loosening up the regulating framework. So you don't need licenses, so you can get, arrangement where the private sector can just procure power themselves, because now renewables are a competitive source of power. So that will also alleviate constraints on the grid, and it will alleviate instead of government going out procuring, a private sector can procure themselves. But there is things there that should be done on the regulatory side in terms of for the smaller scale, looking at net metering arrangements. It's very important to enable growth in at least the SME segment of it. Looking at wheeling arrangements such that you can wheel power, energy banking is important. So I think you can realize a lot of green kilowatt hours onto the grid by unleashing, so to speak, the private sector in terms of contracting with each other here, because the power is now competitively priced, and we see that happening with the large power consumer. And there is a second driver to this. It's because a lot of industry want to green their kind of their carbon footprint, because there are carbon taxes coming in Europe. So if you're an exporter, you need to take that into account into the future, that you also need to comply with these things to export your products. So that's also a driver. So I think you can capitalize on that by putting together the rate framework. So I think that's the two things I would highlight. And it's been done many places now, so it's possible to learn from those places who've done it first. And I think that I would encourage, and I know regulators and people in the various ministries across Africa are talking to each other regularly and continue doing that. And on a longer term, a third thing, which is more of an interregional kind of play, so to speak, which I know there is good conversation going on between the South African power pool and the East African pool. The key enabler there is it's obviously a transmission constraints, which I do think the donor community and the international donor community has a key role to play in terms of where they should put some of their capital is to enable those interconnections. Because also gradually building more power transfer between countries, I think is also going to be a crucial thing going forward to enable the full transition, because you need transmission for that. There will be no transition without transmission. So I think that's also a crucial part that regulator needs to think about the transmission thing, and that was something that held up things in South Africa, where we ended up with large grid constraints and so on. So that's also something that grid planning and building up the transmission infrastructure in parallel is going to be crucial. All of this is not an easy task. It's a huge challenge, but I think there's a lot of entrepreneurship on the continent. There's a lot of great developers. There is also a willingness to invest if these things are falling into place.
Okay, thank you very much for that. I think very much appreciated. I can see I've seen some comments here. I just want to show some of them. So I think we don't necessarily you're not going to pick all of them as questions if they're not necessarily relevant, but it's fair to show that. So thank you, Herbert, for commenting that. It said that we've been trying to raise finance for flare gas power project, but this is not classified renewable, so big challenge for us for funding. Yeah, that's probably another topic, Herbert. But I appreciate the comment there. I know there was always the question of gas that we want to talk about. I think that was just phone ASEAN. Yeah. Okay. I don't see any other question. Let me just take another question. So obviously, if you're watching us, please just do give us your question so we can address that. I'm just gonna go forward and ask to Bjornar, because I definitely here understand that we need to have the right policy in place, and then some country are making step forward. South Africa is the case, but I know that we also been talking about a little bit more of blended finance as a way to unlock large scale of renewable infrastructure. So I don't know what's your take on it. Do you think that that's a viable path just to have obviously private and public sector working together. Obviously, you're from the private sector side, so is blended finance an option that you believe should be considered once we have the right policy in place?
I think so. I think it's for sure a role to be played for blended finance. And I think it should be played where in the areas where the risk is the highest. And what we see in Africa, and we have a few examples of things we're looking at. We have invested in some, and I know there are other things coming, and it's particularly addressing the project development cycle, where you have the highest risk. So there's some good funding structures out there using blended finance to put together fund structures where there's some softer tranches in, such that you can get also private capital into those vehicles. One large one out there is obviously climate investor, climate fund managers managing the climate investor 1 and climate investor 2. They have a large ability to do project development funding first, and there is some junior equity or some blended financing in there, which enable them to attract institutional capital from Europe, because the risk profile then gets acceptable actually when you have these layered. And we've seen the same thing in a debt fund that we are in. There's a few things on the horizon on that, and I think that's a crucial role for blended finance to play, because you can't really. I think there's not enough blended finance to really make an impact when it comes to just the pure debt needed in these large infrastructure projects, because it's such huge amount. So I think you need to help to get those projects to a bankable stage, and then you can raise kind of a straight debt to it. But getting to that stage has always been difficult. So these vehicles being set up to encourage that project development cycle until financial close, I think blended finance has a great role to play, because to be honest, the risk adjustment return on that project development, it's not kind of what private sector will look for, and that's why you don't. That's why it's a gap there. So I think that's a good role for blended finance to play in that space.
Okay, thank you very much for that, Bjornar. So I have received. Okay, let me just take a question as I have in here. This is Ugo. So thank you for the insight. We have seen a particular difficulty in arranging PPA agreement with African clients. Do you experience the same? So good question for you here.
Yeah, not sure. I think there is a challenge in getting that PPA arranged, and I think particularly when we're talking about bilateral negotiations. And I think, understandably, there is also concern on kind of the off-taker and client side if they're getting the best deal. If you're gonna just negotiate bilaterally, that I think that's a very rational thing. If you're going to enter into a 20-25 year contract, you really want to ensure that you get the best possible contract, and you're answering to the taxpayers and the consumers of the country. So I think that's a barrier, and one way to solve that barrier is obviously to have competitive processes, such that you have let's say more or less a pre-negotiated PPA, as again South Africa, but other places has done that as well. Such that you get in bids, and then you get a competitive price, and you don't have to have that uncertainty, and you can defend it towards from the government side at least, or the utility side to your constituents, that this is the best price we can get for the power, because we have been on a tender and we have received the best offers. So I think that's helped a lot. But we have also done the bilateral way, which can make sense in some cases when there are kind of first of a kind projects. We did that in Mozambique with the solar project, but it is a very long period. It takes a long time, which is probably what your experience is also pointing towards, because of some of that uncertainty. And it's been a challenge with solar in particular, because the price has been dropping all along. So you start out a negotiation on one tariff, and then there's certainly something announced that's much cheaper next door, and you get into this cycle of renegotiations, which is a tricky thing. But again, hopefully by moving more to tenders, that could be resolved.
Thank you very much for that. So let me just pick another question that we get in this time is from YouTube. So Andrew from Ghana, I think Andrew is bored here, so he says he's having some projects. You want to see if you can fund them. So let me rephrase it, right? So thank you, Andrew, for asking the question. But let me just rephrase it so that for the benefit of other people watching. So there will be a lot of people that are developers that are looking for funding. That's a trend that we could see. So what is the best way to engage with institution like just like yourself? What kind of size are we talking about here? And at what stage should they be to have, let's say, an audience with you?
No, no, I wouldn't put it that we're not that at that level that I would call it an audience. But I think given the size of what we are trying to invest, about some $400 million a year is what we're investing within renewables in Norfund right now, under both our climate mandate and our regular development mandate. And we are a team of let's say 35, maybe going to 40. So and then it's a limited amount of transaction we can do every year. So maybe 20 to 30 transactions. So then we need a certain size. It's given, or else we were not able to deploy. So we are looking at transactions from our end from $10 million and upwards to 100, 150, depending on single large transaction. And we can only take minority position. That's our mandate, not to take majority, because we are there also to crowd in private sector to also enable them to invest. So that means that per definition, it's quite large projects when we come to the table, and it's closer to kind of let's say financial close or investment decision, although we can come in a bit earlier. And we do that mainly via intermediaries. So one way we do it is obviously that we put on a platform. We are 30% shareholder in Global Lake, which is a major player on the continent, both in the gas to power and also renewables. But they obviously have a large business development team and developing projects and so on. So we're implicitly funding that development via bigger vehicles like that. But we also invest in some fund structures, and that was I always alluded to earlier particularly on the project development cycle. I know there is someone called Allied Climate Partners out now who is about to select, I think, a fund manager for doing early stage project development work. We haven't invested in that, but others have. And these kind of structures, we have invested a few of them, which is more from the debt side. These intermediaries, these funds, and often there is some blended finance into those. They can come in and address and help out kind of early stage development to take them to the next stage. But it's very hard for us here with the amount of capital that we need to deploy to get directly involved in very early stage small projects. So what we usually do is we refer them to either our investment vehicles like the Global X and others, or some fund structures that we have invested into to reach that segment. But I think we do need a steady stream of bankable projects coming through, and we do often see that some of these projects starts out with someone identifying a land plot and having an idea, and then start developing, and then it's infrastructure, so you always need to have strong partners at some point in time to get it bankable, and then they start talking to some bigger developers, and then maybe it ends up in a partnership with a utility or something. So that's a very common setup with a local partner with a smaller stake. But we need to explain that sometimes, that people with a good idea to build a big power plant, you need a lot of capital for that. It's capital intensive, so you would need some players around the table who have access to that capital. But I think often we see also smaller players locally involved in getting the idea and being support on the ground in the markets.
Excellent. Thank you very much for that. And that's much appreciated. So I want to take you back to, because we sort of exploring the other approach that could be looked at when we talk about financing in the continent. So what about African entities tapping into green bonds? Is it again for you a viable option to explore? Is it too early? I know the volume is still very low compared to other part of the world, but
Yep.
is this something that you would recommend? So developers, is investors into this into the industry to look at?
I think the challenge there is scale. That's one of the challenges. We did one of our partners did in one of the projects partnerships we have in Egypt, Scatec. We did a green bond there, but those were 6 big projects bundled together for 500 megawatts and a $300 million plus bond, and that's kind of the size you need. You need maybe a few $100 million at least to do this efficiently, and then will have to have that bundle of projects. They need usually to be. It's hard to take construction risk under these green bonds, so usually you need to finance it somewhere else first and then refinance via bond structure. But then you need scale. In India, we have also seen it and done quite a bit, but again, it's usually then projects that's operational. It's a bundle of projects, and you need 100 millions of scale to make it interesting for investors. So that's one thing. So bundling up, and then the other thing, which is each challenge, is currency, because you would like to get investors in that's comfortable with the currency risk, because you want to tap that kind of hard currency market, which is possible again in some of the more liquid currencies, but maybe a challenge elsewhere. I think we have also in Norfund invested in something called the Green Guarantee Company, which is trying to do exactly this. They're trying to bundle up African projects and provide some guarantee wrap to it, such that they can be receiving the rating that's needed for institutional European and other investors to come in and invest it. So that's an interesting thing we've just invested in, and hopefully they can try and scale this up. But I think it's an efficient way of raising capital. Which I think has a lot to it, but you really need to get to the point where you have more or less operational projects and you need to bundle all them. So that's the challenge.
Okay, I think that's very well understood here. So, in terms of strategies that could be explored to mitigate risk and increase investor confidence for renewables energy, so what would you recommend?
Well, I think it comes back to that whole policy point that we discussed initially. I think that policy framework needs to be in place, and it needs to be predictable and long term, because that's what's investor in this asset class, where you're getting your return back over a 10-year period or more. Predictability is key. So I think there's no rocket science to this in that sense. I think it's tried and tested kind of project finance principles, where you try and allocate the risks in the project to the parties that's most able to carry it. So for instance, it's important that things that's related to the grid, which is outside the project's company, then grid operators and utility needs to absorb that risk, because finding those risks and assigning them to the people that's mostly able to control them, I think that's a key thing to look for. And I think some of the challenges then from some of the projects in Africa to handle is the currency issue. If you can't really tap the local currency markets, and you need to go international, well then getting those funding for a long period of time, which you need for this project, is a key challenge that we've seen. So then many countries revert to dollarized PPAs as the kind of only option. So I think that's a gap. I think there's some initiatives international trying to look at that, and I think that would be a great help if kind of a donor community or others can come together to help out to take out some of that long-term currency risk. Then we would have more capital flowing in, because now you have the markets, you have the long-term capital, such as South Africa, who has a domestic one, makes it work because they have that domestic source. But others who do not have that domestic source of long-term capital are struggling a bit. And if they're going to need get international capital, then you need to find a solution for that currency exposure that you have over a long period of time.
Thank you very much for that. So for people watching us, so we have about 10 minutes left, no more than that. But if you have questions, please keep them coming. I have one more question as well that I received from William Green from our LinkedIn say, which African government increasingly unable why with African government increasingly unable or unwilling to offer sovereign guarantee, is there enough funding in place for PPA liquidity and credit guarantee to sufficiently de-risk new clean energy infrastructure? If not, it's I like it. It's no fun lobbying to do it.
Yeah, no, we try not to lobby too much. I think if we're asked what makes sense as an investor, we will always try and give a frank answer. But we're not doing policy advice. We're not a World Bank institution who's kind of getting engaged in that. But I think the sovereign guarantee part is a challenge somewhat. But I think also I think. What we do need to see is also a realization from the off-taker and from the kind of government side is that if they are able to get reforms through such that their utilities are more creditworthy, then also that sovereign guarantee issue might resolve itself, because then it would be less need for it. So I think that is the only scalable solution. You can add on these liquidity and these guarantee instruments, but you can't really scale that forever. So that will get a certain amount of projects done. But I think we need to acknowledge that at the end of the day, the power needs to be paid for. And then obviously there's a political decision on how to allocate the cost. And I think it's perfectly possible to still have affordable power for low income households. You can have various tariff regimes that enables that. But I think one underlying positive thing is that power is getting cheaper. So that means the more renewable energy project that's contracted, actually that helps on the creditworthiness of some of these off-takers. I mean, seen that in India, for instance, where the discoms there has also been struggling with creditworthiness, but there's been government intervention, but also the financial health of those discoms have improved as they have contracted more and more 2 to 3 cents kilowatt hour renewable power, and their selling price is higher than that. So I think getting more cheap and affordable renewables is a way of helping actually the credit risk of some of these utilities. And I don't think you can scale the various guarantee instruments. They will help at the margin to get things done and get some track record. But the underlying thing is that the tariff needs to be cost effective in some way or form. And then I think you can do without those guarantees and sovereign guarantees. And I think also investors and banks need to also get their kind of used to that. And I think the next rounds of auction, again, coming back to South Africa, will actually, even though Eskom is in partial shape, I think they will gradually remove those guarantees. And I think still private sector will be there.
Excellent. Thank you very much for that. So hopefully, William, you did get your response and you happy with that. So like I say, so just one last question for me, because I think we need to be wrapping up after that. So looking ahead, what would you say are the overall the financial trend that you see could really impact the energy transitions for Africa, the journey?
Well, unfortunately, there's what we're seeing right now is more of a negative trend, because we are actually seeing capital pulling back from the continent. We're seeing it in other markets as well, and I think one driving factor there is the rise in interest rates in the US and elsewhere are making that risk return equation for a lot of investors, dragging them towards those markets. And in addition, on top of that, you have all kind of the subsidy races going on between the US and Europe on renewables, which also pulling a lot of capital out of the markets we operate in. So I think in short term, it's a bit of a negative trend actually, and we've seen announcement and we've seen partners who's kind of, they're not pulling back from renewables, but they're allocating the capital to other markets. So that's negative. But in the longer run, I think the main benefit for Africa is that it is immensely resource rich, and also particularly in renewables, because they have the combination of a lot of solar resources. There's a lot of untapped hydro. There's a lot of wind. So I think there's the potential to get very cheap energy, and you see that some of these green hydrogen schemes that's been putting together in Namibia and other places. It's because of the resource they have, combining some places where you can combine wind and solar are among the best in the world. So I think that will drive, hopefully, investments back to the continent. With if those policies could be put together, but in the short term, it's a bit of a negative trend. But to be honest,
Okay, excellent. So, just gonna finish up there because I think we coming to the towards the end of the show. But I just wanted to respond definitely to Herbert saying that okay, thank you for the interview. So Bjorn and also Tony, so we appreciate that you for giving us your time and staying with us all the way here. So, what I want to say to you, Herbert, but also all the people that will be asking you, because obviously this interview will be air live on LinkedIn, on YouTube, on Facebook, and I think it's probably people can catch up afterwards as well. So for any question that you have, so I'm just gonna obviously tag so Bjorn into those questions, so he will respond to you. So what we actually have wanted to do during this 45 minutes spent together was to tap into the most important because I have received as well a lot of questions into my inbox. I just couldn't process all of them because we just have
sure,
some. But what it showed me that definitely there is a strong interest there. So I'm sure you wouldn't mind me potentially re-inviting you because it looks like a lot
sure.
of people wants to hear from you. So Bjorn, so that's what we're gonna do. So yeah, thank you, Herbert, and thank you everybody for listening. So coming back to you, so thank you very much, Bjornar, for taking the time to giving us some insights. I know you say that the trends going forward in the short term is a little bit negative, but the key thing for me here is to learn the lessons and to see what could be done to obviously to take it back upwards. So thank you for your time, very much appreciated. And as I say, we definitely will have to invite you back into the show because a lot of people did like it. So thank you for your time. Yeah.
Thank you very much for inviting me. It's been a pleasure, and thanks for all the great questions. So I'll be happy to be back to chat with you, Tom.
Excellent, excellent. Thank you for that. So this is actually coming towards the end of our session. So hopefully you've learned a thing or two. But what we can actually pick up is having the right policy framework is essential, is key. Whatever form of financing you want to be bringing, because you want to make because a lot of those investments, especially infrastructure, those are long-term investment. There needs to be a visibility for investors. Whether you talk about local investor, international investor, give them this confidence. If you want to look at countries that have done it well, so clearly you want to look at, for example, the example of South Africa with the RIP program. I know there is a lot of things that need to be said there, but still, it has delivered gigawatts, of renewable power for the country, which is actually moving ahead. Having said that, challenges persist. One of the key persistent challenge that we're talking about here is transmission. Yeah, it needs to be looked at. So we couldn't tackle all the questions, so I must apologize for that. So we're just going to do our best to respond to the comments. But I want to thank you for following us here. And I just wanted to say, right, if you are a project developer, if you are an investor, if you are an EPC company, and you want to tap into the continent, expand into Africa, definitely do reach out to us. Why? Because we want to show you how you can 10x your return on investment. You're probably going to say, how are you going to do that, Tony? Very simple, right? So I want to show you how by using our awareness program, we can help you to get some visibility, but also, like I said, to engage with your target audience with the view to grow your business, right? So if you want to know more, definitely send me a message on DM. So I'll respond to you. The team will be responding to you. So all in all, what I have to say, thank you very much for a very engaging conversation. Lots of questions I have received. Some of our best audience in here. So thank you for being on for that. And we'll be back very shortly. Yeah. Take care and have a great day. Bye bye, guys.